The one thing that's constant about mortgage rates is that they constantly change. In this video, I'd like to look at that rates that have changed, put it in some perspective historically, and look at some ways we might be able to deal with them and help ourselves along the way. This first chart shows 7.5 years of data. It's for a 30-year fixed rate mortgage, and it indexes the rates as we go through time. For the first 6 years, interest rates were consistently below 5%. Now that one peak, which came close to 5%, was in 2018. And you may look at that and say, wow, those buyers missed the boat because they could have bought a little earlier or a little later and saved some mortgage money. Well, I'm not too worried, because what I can tell you is they probably refinance that in the next few years, maybe once or maybe even twice, and locked in a really great rate, maybe during COVID. There's a slogan in our business, and it goes something like, marry the house, but date the mortgage. And so that's what people could do. Now, after 5 years of home ownership, they're in great shape, and I'm pretty sure they're happy campers, locked in on a low rate, and can move forward as long as that house works out for them. So moving into the next phase on this chart, we see the COVID years in 2020. So after a little brief period of indecision, buyers jumped into the market and decided they wanted a new house. And whether it was because they needed a Zoom meeting room, a place to work from home, a place to do homeschooling, or whatever myriad of reasons there were, they wanted to buy another house. That drove up prices because interest rates were low. People could afford to buy a bigger, better, more expensive house. The problem was there wasn't much inventory to buy. So as a result, the demand drove up the prices. And in the meantime, inflation kicked in on everything. The cost of fuel and food, the ability to get products and get things done. Builders couldn't get parts or materials, and when they could, the labor was expensive. So all kinds of prices went through the roof. Now it took a while, but finally the Fed kind of woke up, smelled the coffee. Maybe they had to go to the grocery store and buy groceries like the rest of us, and they decided that inflation wasn't transitory. So in 2022, last year, they kicked in programs and policies that drove up interest rates. So that's what we saw. We saw in the first 9 months of last year, interest rates more than doubled. That's a historically rapid increase. We've never seen rates go up that much that quickly. And they peaked at about 7% last fall. So moving from that period of time, they've been bouncing around, with a few exceptions, between 6.5% and 7%. And what are the implications? Well, we did see a lot of impact on the buyers. Unless they're paying cash, the cost of that next home was going to be higher. So they either had to adjust their plans, some people had to drop out of the market, and some people were willing to just go ahead and pay the higher rates to get that house. On the other hand, the part that maybe wasn't anticipated was we saw sellers just wanting to hang on to their houses. So I've had to develop a new slogan. I don't know if it'll catch on, but it goes something like, I want to divorce my house, but I love, love, love my interest rate and my mortgage. May not catch on. But at any rate, that's what we're seeing. People are reluctant to sell because they've locked in a low rate and they don't want to move into another house where they're going to have to give up that rate and pay 6.5% or 7%. So there are some things to consider. One is, go get a 15-year mortgage instead of a 30-year. You'll save about 0.5% or more on the basic interest rate, and you'll be paying it off so much faster. At the end of the day, you'll be giving the bank a whole lot less interest money. Another way to do that is to go ahead with a 30-year mortgage, but pay it off early. Make extra payments, make large payments, and you'll reduce your interest load. And in the long run, you'll save a whole bunch of interest. And you'll still pay it off a few years early. And there's a third option, and it can play in with the other two, the first two that I just mentioned, and that would be go look for lower rates if they should occur. and refinance. Now that one is undecided. We don't know if that's going to play out or how soon. But if interest rates fall in a few years, refinance and save your interest money that way. And finally, I've created a video which works for people with quite a bit of equity in their homes. In the United States, homeowners have more equity in their house than at any other time in recent history. That's because a lot of homes are paid off completely, and a lot of other homes that have mortgages owe less than half of the value to the bank. So their homes have appreciated in value, they've paid down their mortgage, and they have a bunch of equity left that is sitting there. And so in this video that I've created, I illustrate a couple ways people in that situation with equity can move some of that equity to their next purchase and avoid buying a big mortgage. They can make a smaller mortgage work to get that next house. That would be another option that you might want to consider. And finally, I've got one more chart for perspective. This one covers 50 years of mortgage rates. And if we look at where we are on the right side, you'll see that our interest rates in the big picture are kind of in the average range over the years. So they're not as bad as maybe we think, they're just not nearly as good as we've gotten used to recently. And if we look at the early 1980s, we'll see rates were consistently above 10%. In fact, in 1981, they peaked at 18% for a 30-year mortgage. So what was going on? A lot of buyers were baby boomers, they had growing families, and they did what it would take to get themselves a house to meet the needs. And looking backwards, they pretty much look at it as water under the bridge. There's not a lot of people that I know that regret those days or making those purchases. So I hope you found this helpful. Thanks for watching to the end. And if I can help you, please reach out to me. I'd be happy to talk. And until we talk, I hope you go slay some dragons.